and we can directly move on to another crypto-related topic, another hype topic. The next panel will be on CBDCs and stable coins. For those who haven't been following the previous session, we talked about crypto assets, so more the investment side of crypto assets, and we will now talk more about stable coins and central bank digital currencies, where the primary focus is more on payments. The topic has been similar to the topic of crypto assets, really gaining some traction in the recent years, not least due to, for example, big private companies such as Facebook tapping into the market with the project Diem, formerly Libra, and also a lot of central banks around the globe that are discussing or piloting digital currencies. So today, in the next 40 minutes, we will try to shed some light into the whole market, into use cases, into what those digital currencies are good for. And I'm really happy to be joined by 4 absolute experts. Christiane Neumüller, who's partner at Senacor, Dr. Heike Winter, who's head of unit at Deutsche Bundesbank, Professor Dr. Philipp Sandner, who's heading the Frankfurt School Blockchain Center, and Radko Albrecht, who's the founder and CEO of Bitbond. So a nice mix here. Both the public is involved, private companies, startups, and also someone from the academic field. And I would suggest we start with a very brief round of introduction, where you can just in 20, 30 seconds give us a quick introduction to who you are and what you are doing in the space of stablecoins and CBDCs. And maybe let's start with Heike Winter and the Deutsche Bundesbank.
Thank you very much, Patrick. I'm in the Deutsche Bundesbank, responsible for what we call now digitalization in payments, and into this topic for many things. But I think the most important at the moment is the discussion about CBDCs. And at the moment, of course, we are also in the discussion within the Euro system whether there should be a thing like digital euro. So that's it for the moment.
Perfect. Christiane.
Thank you, Patrick. I'm Christiane Neumüller. I'm from Senacor, and I'm responsible for the payment and cards and innovation exactly in this area. And in the last 6 months, we really deeped in the central bank digital currency and especially the digital euro. And so it's very interesting to discuss now with all these experts.
Philipp.
Yeah, thank you, Patrick. Nice to meet you and everybody here. My name is Philipp. I'm working as professor at the Frankfurt School of Finance and Management. I have founded the Blockchain Center there. We are now 10 people and doing blockchain basically day by day since a couple of years. And from a digital euro perspective, we are trying to keep the overview over this very dynamically growing field, also what's happening in China, in the US, in the field of stable coins, and so on and so on. It's quite dynamic and it's quite complicated. Therefore, I really hope that with this panel discussion, we can provide some structure and some orientation.
Great. And last but not least, Radko.
Thank you. Yeah, very happy to be here. Radko Albrecht, I'm the founder and CEO of Bitbond. Bitbond is a technology company. We provide software in 3 fields. The first one is asset tokenization. So when banks and larger issuers want to issue tokenized securities or tokenize other financial assets, they can use our software for that. The second field is custody technology. We're not a custodian ourselves, but we provide banks and other regulated intermediaries with the technology that they need in order to safekeep tokens and cryptocurrencies for their customers. And the third field is on-chain payments, where banks use our technology in order to issue stable coins in an automated way. Very happy to be here today.
Great. So maybe let's start by actually defining what we're talking about. So there's a lot of discussion and noise around digital forms of money, stable coins, CBDCs. what are those different forms of money? Maybe Philip, you are well positioned to answer that question. Could you give us some categories of forms of digital money we could distinguish?
Yeah, of course. In the past we had simply physical cash. That's paper money, that's the coins, that's the metal, right? Then now we also have some kind of, let's call it electronic money. This is also to some degree digital, of course. It's ran in online banking apps. It's ran at the current systems in the IBAN accounts and so on. That works also quite well. And in the future, we see that the euro will need another infrastructure to run, because we will see demands coming up from the industry, from retail, and from others, which will demand yet another infrastructure on which they run. And I think for what we are discussing today, it's important to see that there is the retail area. This is when we as human beings are going shopping, purchasing an espresso and so on. That's retail payments. That's what the ECB is currently focusing on. Then we have wholesale payments. That's basically in the background payments between the central banks and the banks and between the banks. This could potentially run on a DLT infrastructure. Switzerland is focused. Then next we have, that's basically the euro, which is transferred between companies. For example, if Siemens is purchasing something from another company, this most probably will be dealt with by companies who are issuing the euro and somehow create combinations with DLT systems, and what we typically call it is called a so-called trigger solution. I think this is the most interesting form for the industry. And then finally, we have the topic of cross-border payments. That's basically money leaving the Eurozone, going elsewhere or coming from elsewhere. And I think here we see primarily at this point of time US dollar reference stable coins, which are active here and which could be interested here in the future. But this, of course, is still vague to discuss. The European Commission with the MiCA regime is also proposing so-called e-money tokens, which would then also be euro-based stable coins. But I think it's a complex topic, and we also have to distinguish between these four areas when we talk about the digital euro: retail, wholesale, let's call it the industry euro, and international payments or cross-border payments. Does this make sense, Patrick? I hope this wasn't too long.
It totally makes sense. And you mentioned a lot of possible use cases for such a digital euro. Maybe Heike Winter, from your Bundesbank perspective, I mean, we have heard different areas where such forms of digital money could be used. Which is the primary area that is considered by the Deutsche Bundesbank, but especially maybe you can also speak for the European Central Bank in a bit, for the digital euro?
Yes, might be, thank you, Philip, for your definition or classification. What is perhaps a little bit mixed in this is the question, who issues the money? And this is where we make the decision between, I think for many people, they have heard that might be in their economic studies, this is between the central bank issued money and the commercial bank money. And then we have also some things like, if you think about Bitcoin, then it's privately issued by an issuer whom you can't meet. And then you have other kind of digital tokens like stable coins, where we have the famous example of Diem, which should be issued by this consortium of companies around Facebook. So this is also an element which has to be mentioned within the discussion. The Deutsche Bundesbank and the Eurosystem, yes, we are part of the Eurosystem as Deutsche Bundesbank, and at the moment, the discussion when we talk about the digital euro, it's, I think Philip also mentioned that before, is about the retail sphere. The wholesale sphere at the moment is not that much in the focus of the discussion. There we have, as Bundesbank, we have also did some experiments or pilots with the trigger solutions, but yes, international payments, this was the third dimension in Philip's classification. yes, a difficult topic, and of course there is the hope, if there were such a thing, or if there was such a thing like a digital euro, that this should work also cross-border. And cross-border doesn't mean from France to Germany, but exterritorial, let's say to the US or something like that, globally. And this is really something which is, I think, one of the highest challenges we have.
Perfect. So we basically have distinguished between different forms of issuance, so privately issued forms of money, and then publicly issued forms of money by the central bank. And then we distinguished also different use cases, for example, retail use cases, wholesale use cases, and also then cross-border use cases or industry use cases. Radko, I think, if I'm not mistaken, you with Bitbond, you recently issued a euro-based stablecoin on a blockchain. Could you walk us through what was the reasoning behind that, and how that worked also from a technical but also from a regulatory perspective?
Yes, very happy to. First of all, Bitbond is not the issuer of that stablecoin, but we provide the technology so that a bank can issue the stablecoin. So we're a technology provider, and the bank, in this case, it's a Munich-based private bank, which is called Bankhaus Vonderheit. They are the issuer of the stablecoin. Now, what is the motivation for this bank to do that? Well, the bank is relatively focused on securitization and securities transactions. So it's not a large universal bank like Deutsche Bank or Commerzbank that has pretty much all types of lines of business, but is focused on these areas, securitization and securities. And they started out by looking into tokenization first, which is also a technology that we provide. And then we saw that when you tokenize an asset, let's say a bond, for example, which now also under the German Electronic Securities Act, you can tokenize a bond and completely dematerialize it. When you have that bond tokenized and you want to do a secondary transaction, so selling the bond from one investor to another, when you have the bond tokenized, but the payments happen through a traditional bank transfer that is settled through SWIFT or through Target2, then these two transactions, the delivery of the security and the payment, are not linked with each other. But what you would actually like to achieve is something that's called an instant delivery versus payment mechanism, where you exchange the security and the payment in one logical transaction, which happens instantaneously and where the two counterparties don't have any counterparty risk. And that's the moment where a stablecoin comes into play. Now, of course, it's probably going to take still a few years until we will see the European Central Bank come out with a stablecoin, with a central bank digital currency. And then it's still not entirely clear at this point whether it will rather be a retail-oriented instrument or whether it will be a wholesale type CBDC that will fit the purpose of settling securities transactions. And so this bank has decided to say, well, as a bank, we have an e-money license. We could actually take the concept of e-money and apply it to the digital world and issue a stable coin under the e-money regime. And this is exactly what they have done. Again, primarily with the purpose to have a settlement currency that is on-chain. And some of the other banks that we're currently working with that are going to issue stable coins in the future have exactly the same motivation. So it's not really, at least so far, it's not coming from the retail payments side and also not really from your regular payments operations of a bank, but it's always linked to settling securities transactions where you want to have an on-chain delivery versus payment.
Great, thanks. So in this case, the demand is driven basically by the capital market, by the industry. I'm wondering, Christiane, what is your perspective, and also maybe from a Senacor perspective, where do you see the most promising use cases, both for private forms of money, stable coins, for example, but also central bank digital currencies?
So, as I said, the last 6 months, we really go deep in this topic, digital money, digital euro, and all the things. And I was now listening to Radko, to Philip, and to Mrs. Winter. And what I realized, and this is what we learned over this time, there are a lot of experts discussing in detail a lot of detailed things. And we tried to step one by side and say, okay, what are the, as we said, retail customers, the normal customers? Did they understand what we are talking about? And so this was the reason why we tried to really bring it to the earth and try to understand what is the understanding if we as a customer are thinking, what is e-money, what it means for us. And from our perspective, maybe it can be used if we are looking, what I think Mrs. Winter said before, if you have an account with the digital euro, for example, I think you can do everything and you can use every use case what you want. So I think the biggest challenge is to bring it on the, to start and to bring it to the real people. So this is what our feeling was, and also in the discussion and interviews we did, what we realized. So maybe all the others have a feeling about this. So we are experts, we are talking day by day about all these things. We know what an SCT is, what in the payment branch is running on. But if you go, also if I talk with my friends or my colleagues, they are not deeply in this area, they're always asking me, and what can I do with this? Is it something what I need? And I think this is a good question.
Maybe I can jump in here if you wish, Patrick. You know, to be honest, the normal person out should not at all. You know, why should they? You know, it's not interesting at all. But in case you are, for example, purchasing something at the supermarket, and this applies to 450 million Europeans, then you should worry, because in case you're doing mobile payment, for example, you're purchasing something with credit card and with an Apple iPhone, you know, like Apple Pay and so on, then once you're paying something at the supermarket, 2 transaction fees are being sent over to Apple and to MasterCard. So for any transaction out there in the supermarket, you have to pay a fee. One is going to Apple and the other one is going to MasterCard. Day by day, for hundreds of millions of people once they are doing mobile payments. And in my mind, this is absolutely significant. And therefore, I think it's also okay to have the European Central Bank pushing this retail topic. But what the ECB is doing here is not very innovative, not at all. It's a necessity, what they are doing, and it's urgently required to have an own European infrastructure such that not with any mobile payment out there, companies outside Europe are benefiting transaction by transaction. And this is something I think people should know, but at this point of time, they don't know yet. But in case you look at mobile payment or electronic payment, you know, it's MasterCard, Visa, Stripe, PayPal, and so on. It's just US-based companies, and they are earning with our transactions, with any transactions Europeans are doing on the entire continent. And that's why the topic matters. And that's why I think it's okay what the ECB is doing, but it's not innovative at all, and it will not help the industry moving forward. But for this, we have a couple of commercial banks who are really doing a good job. That's my take on this, right? I think it's really about European sovereignty, and therefore I think there is some need that we talk about it, and therefore I think it's also need to understand it, because it's our money which is going elsewhere or stays on this continent.
Would you agree with that, Mrs. Winter?
Yeah, it's yes, of course, we are at the moment within the retail sphere, and Philip mentioned the fees that are paid. But when you talk to people, they are not aware that there are fees paid, because that is normally something which the merchants have to do. And so they have no idea, because they say PayPal is wonderful. What's the problem with PayPal? I can use it. It's easy, convenient, everything. And then and they are not aware that this is not really efficient. And of course, it's not European. But and in this respect, we think this could be an advantage of something like a digital euro, to say there you can move your money easily, convenient. We hope that will succeed. But in the idea is that people can move the money in the internet or in the online commerce, as well as at the point of sale, at the physical point of sale, also P2P, without having someone in between, so as they act with cash, and there would be nobody in between, especially these kind of companies who are collecting data, which is also something which people, if you ask them, do not like, but nevertheless for convenience they accept it. But I think this is not something which can stay on for the next centuries. So this is, I think, should be, from my point of view, only a transition stage. And what I don't know what you know about the idea of the digital euro. Of course, it's the retail sphere. This is one of the only things I think at the moment are quite clear, because the rest, there isn't, at the moment, the ECB or the euro system, we are also part of this, has not yet decided what to do. And we are in the preparation phase, and there will be a decision by the ECB Council in midst of July. And what will be decided then is not how it will really look like, because that will need a lot of dialogue with the market, but only whether we do this next step to the investigation phase to set up a project. This is where we stay at the moment. And what really is in, whether it will be offline or not offline usable, these kind of things are at the moment not yet decided. So we are really at the very beginning.
Christiane, do you agree that basically the reasoning or the motivation behind a central bank digital currency should always be basically to protect the national sovereignty of the Eurozone, or would you focus?
I totally agree. So I can say I totally agree. And this is also the reason why we really discussed with customers, and for sure over Europe. So not only in Germany. So because this independency, I think you had also a speech, I don't know, today about European Payment Initiative. So I think the sovereignty, sorry for German, for Europe to have their own payment models, and including the digital euro, it's really necessary. So if we are looking now on the payment landscape, it's dominated outside from Europe. It's what Philip said. We have the Western model and we have the Far Eastern model. The Western is with OTT players, like we can, with Apple Pay and Google Pay and the cards behind. And for sure, these are much costs, especially for the merchants. And on the other side, we have the Far Eastern model. It's like with Alipay or WeChat. But from Europe itself, it's something missing. And I think the whole initiative, and I agree also with Heike, it's necessary and we have to speed up. And I think it's also a possibility for the banks maybe to get the interface back from the customers to the banks. I think there is also a big chance.
Maybe now let's shift our focus back to the privately issued stable coins. And I'm really interested in your opinion, Radko, since basically the Diem project is still not launching and shifted several times its business model. Do you expect also larger corporations in the future, I don't know, maybe Amazon or Rewe or Tesla issuing privately owned stable coins? Or Do you think that the market will be further dominated by those, I would say, more decentralized stable coins, such as maybe USDC and others that are used mainly in decentralized finance and in blockchain-based ecosystems? What kind of stable coins will dominate the market?
Well, in the short term, I do believe that USDC and Tether and similar stable coins that already today have a pretty, significant outstanding volume will dominate the market. Simply because the original use case, which is having a stable, non-volatile digital currency is necessary in the global crypto markets, which of course is where the original use case is coming from. Then kind of the logical evolution from that is to use these stable coins in DeFi applications, which today is also driving a lot of the growth behind these stable coins. And the volumes today are so significant that even if someone at the scale of PayPal or some other relatively big players in the payments industry were to launch a stablecoin, it would probably take quite a while until they would achieve the same level of outstanding volume. So in the near term, I'm pretty sure that the established stablecoins will continue to dominate the market. Medium to long term, I do believe that there will be competitors, if you will. Although the question is whether they will actually compete with the stable coins in crypto markets and in DeFi applications, or whether they will actually conquer new types of markets. And PayPal, I do believe, is a relatively big suspect here, if you want to say so. PayPal recently acquired a company called Curve, which provides key management technology. And they did that just a relatively short time after they introduced the option to buy and sell cryptocurrency for, I believe, US customers within their PayPal account. And I think there even have been public statements of PayPal where they say that they may actually switch their settlements backbone from conventional payment networks to digital payment networks. And with a technology like Curve, where they are able to safekeep all kinds of digital assets, they have all the necessary infrastructure in place in order to transact with all kinds of digital assets, including stablecoins. So I think medium to long term, the more agile and the more, I would say, innovative payment service firms will introduce stablecoins into the market. But I don't think they will compete in the, I would say, in the original crypto markets and in DeFi, but I think they will rather bring stablecoins into payment applications that transact tremendous amounts of volume. And at the same time, I think this is a warning signal to banks in Germany and Europe, because DeFi may not be something that creates, a big competition, at least not right now, to what the banking and payment service providers' business model is today. But a company like PayPal that already over the past years has taken away huge amounts of market share from banks that, in the payments industry actually had a lot of revenue. If PayPal is now doing something like that and similar companies will follow, then I think this will at some point create a real problem from a revenue standpoint of banks. So I think there will be competition, and I think the competition will primarily happen in the traditional payments space.
Mm-hmm. I wonder, I mean, Radko, you mentioned it, the stablecoin market is completely dominated by US dollar-based stablecoins, for example, Tether and USDC and others. And I know, Philip, you have an opinion on that. Why do you think that is? So why don't we have a very important euro-based stablecoin? And do you think that might change in the future?
That's an interesting topic because talking about it really has a geopolitical aspect. And on the right or in the east, we have China. China is really pushing their digital currency project. It's basically live. They will start launching it most probably next year. They have started doing this since 2014. And they are also considering to expand their payment infrastructure to other Asian countries and also potentially to African countries. So this is geopolitics, right? You do not have a comparable project in project in the US. So there is a gap here, right? And in the US, you have potentially stable coins filling this gap, right? Because the central bank in the US is by far not as fast and as ready as the Chinese central bank, but this gap might potentially be filled by the US dollar stable coins, right? You have USDT, USDC, and a couple of others. And in numbers, they are currently being transacted in real high volumes. You know, I think it's 150 billion US dollar day by day. So this is trillions per month. You know, this is significant and it's growing. It's growing in the last months, and I think it will continue to grow. And therefore, in China, they have a government solution. In the US, they have a gap, but the gap could potentially be filled by US dollar reference stablecoins. And in Europe, we have nothing. The ECB is apparently very slow, and it's now tackling the most boring version of the digital euro. That's the on-chain retail version. We do not have euro stablecoins, and we do not have anything else to compete with this, right? And therefore, this is even, in my mind, more critical, because there will not be a euro reference stablecoins, because the MiCA regulation, which is basically creating the rules to issue an e-money token, are set so high to achieve. So I think it's not a random event which we have seen that Diem has left Switzerland and Europe. Plus, and this is really critical, with negative interest rates and the e-money frameworks, you have, as the issuer of such an euro reference stablecoins, you have to pay money, that's the negative interest rates, to operate. So as of day one, you're operating at a loss. And the larger you get, the larger. Somebody needs to tell me what kind of business model you want to launch, such that you can pay for the loss created between the difference of the zero interest rates of e-money and the costs incurred by negative interest rates. Therefore, I personally see that it does make sense to create a large-scale euro reference stablecoins, and therefore I would expect that the dominance of the US dollar stablecoins, and including the volume, you know, it's trillions per month, will stay like this. Change in the near future. It's exactly the opposite happening. The US dollar stable coins, they are gaining volume. They are getting more and more regulated. Yeah, people are switching away from Tether to USDC, which has a higher degree of regulation. And therefore, for Europe, to be honest, I see a problem here.
Yes.
May I ask, because I was quite surprised listening to Philip to hear him saying that it will be the most boring thing that the ECB is going to offer, because it's still the only thing which is for sure is that it will be on the retail sphere. Okay, but is this really boring? I think some people find it quite exciting to offer such a thing, and I think this will be something, and what we need for the time for development. I think. The idea is 4 or 5 years. This is not much, and I see, and therefore I'm quite, let's say, irritated to call this thing boring. This is on the one hand. On the other hand, you already mentioned some initiative of banks that they will offer something which should be, from your point of view, more exciting. I think you find the wholesale thing more exciting, and there I would know a little bit more about, because I'm not that aware that there is such so much activity in this field.
Well, what the ECB is doing concerning the retail payments, you know, it does make sense for the retail sector, right? But as we discussed in the very beginning, there is much more than the retail sector. You know, we need a solution for the industry, and we should not really underestimate what's happening in the area of US dollar-based stablecoins, right? And there is nothing you can do at this point of time to have something to put into the game once the US dollar reference stablecoins are growing and growing and growing, and there is no basis for a solid business model to issue a euro reference stablecoins, right? And therefore, I think there is a solution missing at this point of time. And I think given the growth which we are seeing in the US dollar based stablecoin area, I think this is truly exciting because we see that I think in Europe, we should try to find a solution how to potentially also get a euro reference stablecoin on the market without a company forced to operate at a loss, right? I think this is really a crucial thing. And this is, in my mind, it's a personal opinion, more exciting than the current version, what the ECB is doing, because the ECB is just tackling one domain, but it's leaving out the other domains, cross-border payments and other things, which the previously mentioned indirectly tackling, and we are not tackling.
Maybe
yes, but I think this is not finished, the whole debate. And of course, there could be some, at the moment, we are just starting and the design is quite open. And I think you can't say this is already, this lunch is already eaten. So we have to see. And as you know, we had some working groups also together with the German industry. We are, as Bundesbank, quite aware of the demand of the German industry and try to explain that this is very important to have something which is something like a digital euro, which could be used also in DLT-based applications. So
still ongoing work here. Since we're running out of time, I would be interested in just for the last 2 minutes to get an idea of what, in your opinion, will drive the market in the next 12 to 24 months? Just an idea. What do you think? How the market will evolve in the future? What are maybe milestones that will influence the market? Maybe Christiane, do you want to share your view on the next phase of developments for stablecoins or CBDCs?
Yes. It's a really good question, and this question I have asked myself, and for the next 6-12 months, I don't have the feeling there will be a big push in this area. So with the stable coins and with the digital euro or digital money. I think we have a lot of other things at the moment on the table in Europe, and I hope it will be pushed in the future. And I was listening to Philip and to Heike, and I agree on both sides. So if you want to push something, you have to start the appetite from the people. And I'm not sure sometimes what is missing. In Germany, we are saying it's Henne-Ei principle. So what is missing? Do we start with experts and don't look at the other, or have we bring everything together? I think this is always, and a lot of initiatives, the key factor to bring everyone together, not only sing on one green field on one table. And this is also my wish, also with this round today, to bring the people together, the areas together, and let's really think what is a solution for Europe.
That sounds like a final statement to me. Unfortunately, we have to come to an end. I'm sorry, I'm super interested in your further opinions, but we're running out of time. Thank you very much, Dr. Heike Winter, Christiane Müller, Philipp Sandner, and Radko Albrecht, for your insights, for your expertise. I'm looking forward to further discussing those topics with you at our Bitkom working groups and meetings. And with that said, thanks, and back to Kim.
Tech is king. That's what Fabian said earlier in his introduction and in his outlook for the day. And so it's a real pleasure for me to share one of our highlights today, our fully virtual 3D Bitkom world. And so our next agenda point, our starter pitch, will be held in this Bitkom world, where you can explore fascinating innovations in the area of fintech and of insurtech. So get ready, grab a drink, get ready to network, enjoy the pitches and enjoy the next digital way of networking. You will find your access to our virtual world on Swapcard. There is one designated button saying virtual world. And for the next 60 minutes, you have time to wander around, to grab a drink, to explore our beach, and of course, to listen to our pitches. And having said that, it was a pleasure to be your host on the stage for the last 2 days. Have fun and goodbye from my side.